Good morning. Welcome to Trading Hour. I'm Reema Tendulkar. With me are Samara Abdi and Pavitra Parekh. And for the markets, it's going strong. It's a 200-point rally on the Nifty. We've conquered that resistance level of 16,800. We had faced hurdles there for the last two attempts in the last 1 month, but today we managed to go over that. And now the key level to watch will be the 200-day moving average, which is 17,033. Talking about the stocks on the way up, it's Bajaj Finance, 8.5% rally on Bajaj Finance. Strong numbers. JP Morgan has upgraded it to an overweight with a target price of 8,500. By the way, numbers coming in from Nestle. Net profits have declined by 4.3%. It's coming at 515. This is sharply lower compared to expectations of 575. So there is a clear miss, at least coming in on the bottom line. The street is going to be watching out the gross margin performance. Across the board, FMCG companies have reported declines in their gross margins owing to the rise in inflationary pressures. And there you have it. The EBITDA at 819 crore is lower than the 885 that we were anticipating. On the top line, it's a very solid performance. 16% is higher than the 11% that the street was anticipating. So to quickly summarize, Nestle's earnings, revenues are a beat, 16% top line growth ahead of consensus expectations of 11%, but margins and profits have come in lower than expectations. As you can see, the EBITDA at 818 crore is a miss compared to what we were anticipating. The stock is flat as we speak. It's off about 10% from its recent 52-week high, and it trades at 61 times forward multiple. Nestle is now reacting adversely to the miss on the margins as well as on the profitability. Let's get in some reactions as well.
Yeah, let's do that. We have Abneesh Roy of Edelweiss joining us right now. Abneesh, good morning. Thanks a lot for joining us. So like you can see, the figures are coming through. There has been a miss on the margin front. We do know that the company did take price hikes of 4 to 5% to try and mitigate the cost pressures, but there is still a significant miss on the margin front. How are you reading these numbers?
Yeah, definitely in terms of revenue, it's a strong beat versus our end consensus. So if you see the 16% growth which you highlighted, that's a good number given last 2 years. Nestle also has seen in-home consumption benefit. So on a 2-year basis, our sense is this is a 30% plus growth, which is a good number. Now coming to a question on margins, if you see, food companies have seen the brunt of raw materials. So all the key raw materials, wheat, palm oil, packaging, milk has been inflationary. How Nestle operates under the current MDE is to go for volume growth, go for market share expansion, ramp up rural. If you compare a Hindustan Unilever versus Nestle or even a Dabur, HUL and Dabur will have much more salience to rural versus a Nestle, and that's why Nestle has been a bit more proactive in terms of getting volume growth rather than getting margins. Margins will be a temporary phenomena, but if you can get the market share and volume growth, that will really fortify the business. So overall, I think going ahead, packaging cost, there should be some benefit. Palm oil, there should be some benefit. But today's development, if you see wheat prices are at a record high, our sense is most of the companies already would have bought most of the wheat. So there can be some impact, but Q2 also margin pressure will continue.
What is margins this quarter? Abneesh are at 20.3%. This is sharply lower than the 24% same time last year. You're saying Q2 margins will further come under pressure. So what do you think the EBITDA margins could look like in the coming quarters? And do you think there would be a change in the EPS estimates?
So for Q2, which is the September quarter, we also need to see seasonality. Every FMCG company will have seasonality. Yes, currently rupee depreciation is also a challenge, but there is some comfort on the food-related packaging cost. So we need to see Q2. It's very early to talk on Q2. But yes, I think because the margins have been lower, and this we have seen even for Colgate, if you see the margins are much lower, even for United Spirits. If I have to summarize the results which have come till now, Hindustan Unilever and Asian Paints clearly have managed their margin profile better. Of course, for Hindustan Unilever, tea prices have been a comforting factor, so slightly portfolio is different. But yes, for Nestle, we will see the numbers. I think there will be some downgrade for this year. but definitely because of global deflation and liquidity easing off, I think commodity for next year is not a major concern as of now. So the impact will be on this year's numbers, but we'll have to wait for the con call which is there today. We'll have more details later.
Oh, yes, we are waiting by for the management commentary. Avnish, I request you to stay on, but we also have Sanjay Manyal joining us now. We are also joined by Avnish Agarwal. Sanjay, if I can come to you first, we've just got the initial numbers through. There is a beat on the revenue front. It's coming significantly above estimates, but the margins are where we are seeing pressures, owing to the higher costs. Take us through how you are looking at these numbers. We're, of course, waiting by for the volume growth, but in the meantime, your reading of these initial numbers.
Yes, so on the revenue front, numbers are better than what we were expecting. We were expecting somewhere around 10% kind of a revenue growth. The revenue growth has been around 16%. So on the revenue front, yeah, they have done better, but margins, according to our expectation, they should have done somewhere around 21.9%. But I think it is almost 150 basis point or odd lower than that. So there has been pressure from the commodity side, whether it is milk prices or wheat prices. All these agri commodity prices have gone up sharply in last 1 quarter, and that has impacted the margins for the company. I think margins should recover from Q2 onwards, given the fact that the government has put a restriction on the wheat, and even the crude related packaging costs will start coming down in next 1 or 2 quarters. So ideally December quarter should see the margins probably coming back to the normalized level.
But at least as of now, wheat continues to remain at record high levels. Amnish Agarwal or Prabhudas Leeladhar is also with us. Amnish, we've been talking about the numbers, but Nestle has also made an acquisition. They've approved the acquisition of a pet food business from Purina Pet Care India Limited. They will be paying a total consideration of 123 crores for the pet foods business. This is a niche area, but it's fast growing and it has a lot of resonance, especially in the metro as well as larger cities. Your thoughts on this acquisition that Nestle has made?
You see, the acquisition as such is very small. They are paying some 130 odd crores and the top line is just around 36 crores. So if you look from the Nestle standpoint, a company with a top line of 16,000 crores, this 36 crores is actually nothing. So will it move the needle? The answer is no. Now when it comes to pet care and pet food, for example, it's a, you can say, high growth segment. Okay, and I think it addresses, rather than giving any big push on the top line and all, I think there were investor concerns, say 2-3 years back, that why the pet food business is being done in a separate company. And at that time, the logic was that it requires a different distribution, okay, different sort of, you can say, distribution, management team and all that stuff. But I think, in my view, will it change any numbers or other thing? I think it's no. It's more like that they are bringing one of their other arms, which was into India, into this company.
All right, gentlemen, I request you to wait on. We also have Mangalam joining us. Mangalam, like we were pointing out, there seems to be a beat on the revenue front, but profit and margin is where we are seeing a little bit of a miss come through. Any more details that you've been able to pick up?
Well, a couple of things. These don't look like a particularly bad set of numbers, especially on the revenue front. A 16% plus growth is what they've posted in their domestic business. That accounts for nearly 95% of their overall revenues. And as a result of which, the company has gone ahead and crossed the 4,000 crore mark in quarterly revenues for the first time. So that's an important point. The gross margins have compressed by around 300 basis points year on year, from 57% to 54%, and that is exactly the kind of decline that we're seeing in the EBITDA margin, from 24% to 21% as well. So that's telling you that the company is actually going ahead and optimizing all the other expenses, and which is what is witnessed, because the other expenses as a percentage of sales are around 23% as against 22% what they were the same time last year. The net profit, of course, has been below expectations, largely led by a miss that we've seen in the company's EBITDA. But then again, going forward, things look much better as the commodity costs are cooling off. Importantly, what the company has also done, if you just take a look at the EBITDA, there have been a couple of provisions. So you adjust for that, the EBITDA is close to around 850 crores. The other, the factor about Purina, them getting Purina internally, will only tell you that, you know, they will get some incremental growth coming in. The pet care market in India is close to around 3,600 crores, likely to cross the 6,000 crore mark by FY26, and 63% of the overall pet care market in India is pet food, and in that Nestle has a further headroom to grow. So that is something that we will be watching out for as well. The management conference call is at 4 today, so we'll focus on, you know, what kind of new products are they launching, and more importantly, the commodity inflation, has that cooled off or not, because as far as demand is concerned, there's really no problem. 16% domestic revenue growth is something that the street likes.
Mangalam, thank you very much for that. So two important clarifications coming in from Mangalam. One, the adjusted EBITDA is actually at 21%. So this is better than what the reported EBITDA turns out to be, which is 20.4% if you adjust for the various one-offs as well as provisions. And secondly, the acquired company Purina is actually a related party transaction. It is owned by the holding company of Nestle. So they own Purina and they own Nestle India, and now they're just integrating the two. We still have our experts with us. Sanjay, your final say on Nestle India. Is it a buy at these levels, and what will be the key things that you'll watch from the management in the investor call at 4 p.m. today?
No, I think we will be looking to hear the commentary on the milk and the milk product business, because that's the one business which has been from quite a few quarters now, where the inflation or the commodity inflation has impacted the business. We would like to hear on that. As far as our value means our target is concerned, we have a hold rating on the stock. We'll review it after the con call, but there is no doubt about the fact that Nestle, as the other MNC FMCG companies, are trading at a premium multiples, and we have a cautious view on in that sense.
All right, cautious view, Sanjay and Amnish, as well as Abneesh. Thank you very much for joining us and taking us through your initial thoughts on the Nestle numbers. Of course, we're waiting for more details and also the investor call, which is later today. So we're going to keep our eye out on that. For now, the stock has come off a little bit, and you have seen a little bit of a slip. There you have it on your screen, but it is around 0.6% in the green for now. Let's get into our first short break.